Shocking. Mercedes scales back plans on EVs due to slow demands. EVs hit traffic as Mercedes-Benz backs away from the plan to go all-electric by 2030. Mercedes Group AG, the premium automaker, through its CEO Ola Källenius, warned that EVs would continue to cost more than combustion cars for several years to come, as the German automaker announced plans to continue offering consumers a blend of combustion engine cars and EVs. The company's shares flew up. But what happened to Mercedes-Benz's confident prediction a few years ago? Why is the automaker joining others like GM and Ford that are pausing or pushing back EV plans? Have EVs run out of juice? Now, let's break it down. Mercedes-Benz is the latest automaker to dial back its EV ambition. With investment in technology and capacity development outrunning potential EV demand, automakers and suppliers are betting big on EVs' future demand. This reality has prompted manufacturers to readjust their production plans, just as Mercedes-Benz did recently. The German automaker has announced that less than half of its sales will be EVs in the next decade. The company has planned to transition back to internal combustion cars and more likely advanced hybrid power plants. The change of heart for Mercedes comes from the turn in the tides of EV's fortune. Some include public charging infrastructure that has not caught up with the growing EV fleet, government scaling back subsidies, and rising electric costs, which make it expensive to run. The Biden administration hitting the brakes on the transition to all-electric has helped automakers back off the strict mandate and produce what the consumers want. This move has caused a reduction in EV forecast as manufacturers switch back towards ICE and hybrid. The simple fact is, people don't buy EVs. Hybrid has been the right idea all along. For one thing, a Kia Toyota was right that EVs might not be the future, stopping the auto giant from jumping on the EV bandwagon. With Mercedes-Benz pausing its EV plans, it would be interesting to see how this changes its future product line and all the other automakers. While global EV sales rose by 31% in 2023, it was only half of 2022 growth. Automaker giants like GM and Ford have informed investors about their over-ambitious EV plans, one focused on the wrong market segment. Even startups like Lucid and Rivian forecast much reduced EV production in 2024. So what are the issues behind Mercedes-Benz action on EVs? To set things in clear perspective, let's talk about some figures. The company's disappointing 1.8% year-over-year declining revenue of 40.2 billion euro for its 2023 fourth quarter results is critical. Full year is up 2%, with 153.2 billion euro in revenue and 4.33 billion euro in the quarter for earnings before interest and taxation, EBIT, which was down to 20.1%. The figure for the entire year declined by 4% to 19.66 billion euro. As full-year net profit inched down 2%, net profit declined 21.5% to 3.16 billion euro in the quarter under review. Cutting away from the figures, the Germany-based auto giant anticipates challenges going forward amid evolving market dynamics, geopolitical uncertainties, and supply chain issues. A significant risk factor the company has to contend with is the persistent supply chain disruption, which impacted the automaker's operations in 2023's last quarter and the first part of 2024. It is no wonder that the business environment is witnessing layers of uncertainty through the strained relations with China and the escalating geopolitical tension of the Russian-Ukraine conflict. The carmaker anticipates unit sales of its models to remain fixed from the 2023 level, with an expected adjusted return on sales in the brand of 10 to 12%, down from 12 to 14% in 2023. Mercedes-Benz shares have soared after the automaker's recent announcement that it is walking back its EV deadlines while continuing to work on combustion cars. EVs are not making enough money for Mercedes-Benz. The company's shares were up 5.9% following the announcement, bolstered by a $3.3 billion share buyback program announced by the company. But we all know this wasn't the case with this well-known auto giant a few years ago. Any fan of Mercedes-Benz would remember how the German carmaker outlined the plan to go all-electric by 2030. The ramp-up in developing zero-emission vehicles has triggered the auto giant to jump into the decision. Mercedes had a dream of offering electric models in all segments by 2022 and will only launch EVs from 2025. The Germany-based automaker believed the EV market was picking up speed, especially in the luxury section where Mercedes reigns. The company believed that the tipping point was getting closer, and it would be willing to make a switch to electric only by the end of this decade. The automaker proposed to invest over €40 billion into EVs between 2022 and 2030 to facilitate this shift. Mercedes-Benz dreamed of setting up 8 gigafactories for producing cells at a battery capacity of over 200 gigawatt hours, in addition to the planned network of about 9 factories dedicated to manufacturing battery systems. Mercedes-Benz achieved this goal by designing outstanding models like the crisp and aerodynamic EQB SUV, which has a 245-mile EPA estimated electric range and 70.5 kilowatt-hour battery capacity. The Mercedes-AMG EQE sedan, with its sporty and futuristic interior and excellent driving sensation, was another model that testified to Mercedes-Benz achievement. If you think AMG EQE was cool, check out the AMG EQE SUV and other models like the EQE SUV or EQE sedan, and you will see the combined all-electric identity and powerful dynamics in them. Fast forward to 2024. Mercedes-Benz is walking back its plan on EVs. The company is set to update its combustion engine lineup well into the next decade. In addition, Mercedes-Benz expects electrified EV sales and hybrids to account for about 50% of the total by that date. CEO Ola Källenius cautioned last year that even Europe would probably not be ready for an all-electric lineup by 2030. Adding that consumers were holding back investment in EVs for various reasons, like appealing electric models and a lack of charging infrastructure. Moving forward, Mercedes-Benz assures investors and consumers that the company has the capability to maintain the production of combustion engine cars and will update the technology well into the next decade. One thing is sure about this move by Mercedes-Benz: the future is exceptionally uncertain. The Germany-based auto giant knows this, with the company's outlook for 2024 expected to have lower returns on sales across its van and car divisions. It also forecasts the first quarter sales to be lower than the previous year's level. Electrified sales of vehicles such as hybrids will remain at about 12.6% for 2023, in line with its forecast, as component shortage, supply chain-related costs, and inflation ate into the company's profits. Mercedes' forecast for 2024 includes an expected lower adjustment return of 12 to 14% for vans and 10 to 12% for cars, down from last year's 15.1%. While the German automaker raised spending on development and research for future technologies, like its MB.OS platform, it also increased its average price by 2% to $80,396. Despite a 2% rise in the company's revenue, group earnings before interest and taxes fell from €20.5 billion to €19.7 billion. But Mercedes-Benz is not the only luxury brand that will steal the show. Its arch-rival, Hyundai-owned Genesis, is stepping on the gas to unveil its hybrid variants by 2025. For an automaker that has never sold a hybrid before, Genesis focuses on EVs and combustion-powered cars. However, the Hyundai Motor Group will soon change this, since there are indications that the first gasoline-electric Genesis variant will go on sale in 2025. With a 2.5-liter engine, bigger than the Kia Carnival's van's hybrid's 1.6-liter engine. It will offer better fuel efficiency compared to ICE variants, and it won't depend on charging networks related to EV models. The company will likely equip hybrid engines into popular Genesis models like the GV70 SUV and G80 sedan. When we checked a few year sales of Genesis models, it was clear that the brand's fans were reluctant to switch to EVs. Of the 225,189 vehicles Genesis sold last year, only 18,846 were EVs. As the company's hybrid share increased from 7.1% to 10.6%, the EV share dropped from 5.7% to 5.3%. While the US percentage of EV sales to ICE sales was 7.6%, Genesis was above average with 8.4%. As another automaker like Hyundai Motor Group wakes up to the reality of EV uncertainty, it is hoped that an auto giant like Lexus will be next. The Japanese luxury division plans to sell 100% EVs in North America by 2030 and globally by 2035. Back in 2005, the automaker released the RX 400H, the world's first hybrid luxury vehicle that changed the luxury market. Since then, Lexus has released new EV models. With the demand for the EVs plummeting and manufacturers walking back their plan for the technology, will Lexus stick to its ambitious plan? Well, time will tell. Meanwhile, Mercedes-Benz's plan to release 15 new models to rival Tesla's frequent market price cuts and key competitors in the Chinese market is quite shocking. How the German auto brand hopes to pull such a stunt is not clear. Even though Mercedes only keeps its EV plans on hold, going aggressive with 15 new models may not give different results from the previous experience. With the government shifting gears on the transition to all-electric and EVs piling up in dealers' lots, Mercedes-Benz has made a great decision to roll out ICE and V8 and walking back its EV plans. Even though the automaker has made forecasts of the future, it's ideal to wait and see what happens next. If you want to keep up with the latest in the world of EVs, subscribe to be updated with hot news in the auto world. You can also drop your thoughts on Mercedes-Benz's moves and whether they are right or wrong. Let us know what you think.